Good morning, ladies and gentlemen. Welcome to the NFT Morning Show. We run this show, if it's your first time listening, we run this show Monday through Friday, 9 a.m. to 10:15 a.m. Eastern Time, each and every week, where we discuss all things technology, crypto, finance, entertainment, gaming, and just about everything in between. I'm your host, P.O., here with my co-host, Nifty Nick, funniest man in the business, crypto punk holder extraordinaire, Signal, coder turned content creator, the host of the Artist Spotlight series at the Nifty, the weather reporter of all weather reporters, Easy, the dog behind Bodago's sorry, Gigs. The doggo behind Bodago's NFT collection, the Solana celebrity, the host of GM Market Talk, day trader extraordinaire, King Kicks, Crypto Raiders CEO. Crypto Raiders Gaming Studio. Shout out to Cyber Stadium, popping off 200K plus in the prize pool, 100% for the players. Clemente, of course, producer extraordinaire, the man behind the scenes, would not be able to do the show without him. And last but not least, we have Bunny. Bunny, your bio says to DM you to rent your profile picture, serious inquiries only.
Yeah, if Blur can do it, why can't I, P.O.?
Are you launching a competitor to Blend?
It's a small operation, though. You just DM me. We run it on an Excel sheet. It's kind of like ordinals.
Okay. But are you going to send your Bored Ape to the person that rents it from you?
No, I mean, Blur doesn't send you the NFT. You get like this weird contract that like says you kind of own like 20% of it if they don't recall the loan whenever they want.
Are you going to, take out any loans against or, mortgage any NFTs on Blend?
Oh, no, dude, you got to be. Yeah, it's severe mental illness to mess around with that stuff.
Anyway, ladies and gentlemen, today we're going to discuss Blur announcing a lending protocol. Obviously, this is the biggest story in the NFT world. We're going to talk about what it's going to mean for the market in the short and long term. I can't wait to hear from Easy on this. We're also going to talk about what collections have been winning after the announcement, and just other news from a very busy Monday in the NFT space. And look who's here 2 days in a row, Mr. Spencer of Spencer Ventures. How's it going, Spencer?
It's going good. I wore my NFTs are dead shirt today. Why? Because, Blur just continues to kill NFTs. I don't know what they're doing, what they want to do, but I'm glad that we have a scapegoat for everything that we don't like in the NFT space. And as a matter of fact, the bear market has not only served us up one, but two scapegoats. We've got Blur, we've got Frank. It's incredible, I'm glad that we as a community don't have to take responsibility for anything that we have done on our own.
And Spencer, my kid spilt their yogurt this morning. And I said, Blur did this.
I know.
I did like that meme that you posted, Spencer. Spencer, ladies and gentlemen, posted a meme that was like, it was a train and there were people tied up on the train tracks and the train could go on two different tracks. And one track was blame Blur and the other track was blame Frank. If I recall, maybe 6 months, 12 months ago, there you go, right there. There was also a blame Farouk era where everything bad that happened was Farouk's fault, but it seems that he's been spared by the NFT market. Now it's blame Blur or blame Frank.
When can I use like Frank of D Gods, not Franklin? I thought we were saying blame Frank.
Oh no, we were saying Frank of D Gods.
Oh yeah, I was saying Frank of D Gods. That man. Look at him. What's he done for his community? What's he done for anyone? What's he done for the public hotel and the good folks trying to use the elevator? Just to get to their hotel room, put their bags where they want to go, pick up their new outfit for their day. Couldn't go up and down that thing.
Franklin falls into the blame Blur category. Nick, were you going to chime in with something?
There's a couple of things. I'm trying to figure out. So is Blend live? Like, can I go take a loan against my CryptoPunk right now?
Yeah, Punk, Miladies, and Azuki are the only three.
What do I get on Punks right now?
You have to wrap it, right?
Oh, okay. So, let's say I wrap it because I'm good at beatboxing too. So what comes next?
You wrap it, and then basically you set the APY that you want on your loan, and you set basically the minimum amount that someone can pay for the loan, right?
Not quite. So like if you if you have a punk and you wrap it, you can borrow. It depends on the interest rate you want to pay and how much you want to borrow. But what's been pretty crazy, and I'm not sure if it's still like this today, but as of yesterday, there was a lot of 0% interest rate loans available. Because I guess people
points.
So yeah, the way the points work is you need to have the closer your points are, the closer the interest rate is to 0, and the larger as a percentage of the value of the asset the loan you're giving is, the more points you get. And you're penalized if you cancel your loan within 24 hours.
And my loan is in ETH.
Yes.
So
Yeah,
I could
ETH
just
or Pepe.
basically I could borrow against my punk.
Yeah.
Wrap it, borrow against the punk, get a 0% interest loan, go invest that in an ETH yielding solution that gives me like 5-6%, something like
yeah,
well,
Lido.
the loan
Lido,
person
Lido
can-
states ETH is the thing. Steth is the safest thing to put it in. Now, the caveat here, and this is a really important caveat if you're doing this strategy, is that after 24 hours, the lender can cancel the loan at any given point, in which case you do not in which case the loan gets automatically sold to the next best interest rate at that same amount of ETH offered.
And
And
if
so-
there's none, then it's a 30-hour timer, right? And then they
Goes
get
through
30-hour
Dutch
timer
auction.
before your liquidation.
Okay, well, we're going to dive into the nitty gritty. Obviously, there's a little bit of it's a relatively technical setup that Blur has provided us, but I'm excited to dive in and go through all the different examples. We got to get to the weather report and understand what's going on in the NFT space real quick. Got to send one shout out. SoRare's way, sponsor of today's show, is SoRare. Second season of baseball on SoRare is live. The MLB, Major League Baseball. If you don't know what SoRare is, it is a free-to-play fantasy game, this time specifically baseball game, and corresponding marketplace that transforms the fantasy player in an actual owner because you own the NFTs. So you can own and build fantasy teams like a pro GM, and you can collect, buy, sell, trade, and compete with officially licensed digital player cards against opponents all over the world. So you start on for free, get some free cards, then you can win higher value cards that you can sell. Everything's on Starkware, so layer 2 ETH, all you ETH maxis out there will be satisfied with that. You can actually also just win straight up ETH in the process of playing the game. So SoRare is also, allowing you to enter some big tournaments, especially for the NBA playoffs and things like that. But obviously right now we're talking about baseball. And last but not least, there was a record-breaking sale last month, 180K card sold. So you got to love the big sales. It seems like this year there's been 4 or 5 sales over 100K. So really cool to see. So we're actually giving away a limited Mike Trout card to listeners who sign up with the link that is pinned to the top and draft their starting team. So definitely sign up with that link. Nick, go ahead.
He's not a fish.
Mike Trout is not a fish, ladies and gentlemen. He is a baseball player. A very good one. So yeah, shout out to SoRare. Make sure you check out that link, sign up. You can play for free. I think we're also going to be starting a league for, the listeners of this show, specifically for baseball, where you can play against each other and play against me and Nick. So definitely sign up for SoRare. Get your feet wet, get your legs underneath you so that you're ready to play. And again, it's free. Future of NFTs starts free. Anyway, Kix is on the weather report. Kix, please take it away.
You got it, Coach. Really excited to be here with you today. Today is the 2nd of May, 2023. We're coming in at $30 million in market volume. Blur up to 22.4 million in volume. Are they cooking those numbers with the Len volume? I don't know, but that's up. That's up. OpenSea, not up, 6.3 million. Looking over at the leaders, Apes, 47.3. Mutants, 10.6. Punks, 53.5. Punks holding up pretty nicely with the blend going on. And actually, there's been some rallying. Bored Ape Yacht Club at 51.5. Mutant Ape Yacht Club up to 11.6. We got Azuki at 17 ETH. D-Gods sitting at 8.3. Pudgy's right around 4.2. Moonbird's 2.6. Captain 7.5. So Azuki doing very well off of the Blur Blend program. Over the past 24 hours, speaking of that, there's a peer-to-peer perpetual lending program. They started off with Punks, Azuki, and Miladies. All three are up. Milady's, I think, are up the biggest. They're up like 30, 40%, something crazy like that. Lending points will replace listing points for specific collections, and the platform is also offering buy now, pay later options. Collections are running with Milady's up 30%. So if you don't got the cash for it all, just, throw a little down. Buy now, pay later. Just like you can do at Aaron's Furniture. Sotheby's announced a new marketplace with curated selection of leading artists. The roster starts with X-Copy, Tyler Hobbs, wow, Sam Spratt, and a host of other top names. The seller fee is only 2.5%, and all royalties will be honored through smart contracts. Yuga Labs, in partnership with Gucci, made it to the Met Gala after Alexis Ohanian was spotted wearing a Gucci tuxedo with matching Coda cufflinks and a Coda brooch. The accessories were made from sterling silver and featured blue, a Coda from the other side. Lastly, Pepe, it's just not slowing down after the coin eclipsed Shiba's 24-hour trading volume. I checked in early this morning. It was ahead of Solana's 24-hour trading volume. Easy didn't like to hear that. Thought I was talking shit. I wasn't. Pepe is now in the top 100 cryptocurrencies and holding a market cap close to 500 million. Looking over at crypto, we're ranging. Bitcoin's trying to hold above 28K. ETH's trying to hold above 1,800. Solana's fighting back for $22. Ape's trying to get back up above $4. It's at 3.8. Slight pullback in crypto. Back to you in the studio.
Hey, Pio,
What's going on?
you gonna head over to Sotheby's later to grab a brooch?
I was about to say, if I go to Sotheby's, I'm going to be sporting a brooch. We're just giving you a hard time, Kicks. It was a good weather report. Your pronunciations are
I've
just
been improving, right? I've been taking lessons.
When I wrote that, I knew that word was going to I knew that word was going to get you, but I was like, I don't know what else to call it. It's not a thing. So I had to call it.
I have no fucking clue what a brooch is. I'm guessing you wear it with
a brooch.
A brooch. It's a thing. It's like a pin that you wear, and it comes in lots of
I was gonna say you've gone to prom for sure. You're married.
You're a fucking prom king or something like that, dude.
Okay, you guys are mad at me. If it was called brooch, why would you put 2 O's in it? That's the speller's fault. Whoever originally spelled that's an idiot. Okay,
it's clearly Frank's fault. That's all I know.
Yeah. I feel like brooch was probably come up with by like William Shakespeare or something. So I don't know.
You are correct. It is spelled weird. I will say that
brooch would be like BR like
OCH or something.
Yeah, exactly.
ACH.
A double O. I'm going with the
brooch.
Ooch, maybe. We get that ooch.
All right, brooch.
I actually don't know if I would have gotten it right after looking at the spelling. I'm like, I could have gotten that one wrong.
It's probably American spelling versus European spelling. Kicks is right. It's brooch.
Okay. All right. Fair enough. Anyway, some other updates. Ladies and gentlemen, from the Nifty Daily Digest, sign up at thenifty.com. It's the newsletter that goes out 5 days a week. You're also going to need to sign up there for the free NFT that we drop today, just like we drop almost every day. So make sure you go to thenifty.com and have an account ready to rock. But anyway, biggest announcement is obviously the Blur Blend protocol. We're going to talk about that. Goblin Town teased another free mint titled Chapter 64 as the 1-year anniversary of their infamous collection is coming up. This time it's available only for the worthy. We'll have to see what happens with that. Jack Butcher's Pepin opt-in mechanism for sets 1 and 2 has begun, with holders able to opt in via a gasless transaction for a chance at an addition in the set. Sets will be released in sets of 80, with 200 sets released over time. So more action on Jack Butcher's side. We can chat about that a little bit. And then last but not least, Artifact Season 1 apparel has begun shipping. And more batches will be shipped out over the next few weeks. So this is a year after the fact, I think, but it's cool to see the apparel actually get out there, 1 year later. Those are your updates from the Nifty Daily Digest. Look, we got to talk about Blend. Blend is the big story of the NFT space. It's Blur continuing to progress at a faster rate than OpenSea. This is my personal take on what I see. I have no horse in the race. I don't own any Blur or care whether Blur outperforms OpenSea. But what I see is stronger performance and, just overall strength from Blur. So let's cover the basics. According to Blur, Blend is a peer-to-peer perpetual lending protocol with market-determined interest rates and no Oracle dependencies. I love. Well, what is an Oracle dependency? Can somebody help me understand that?
If you have to ping Chainlink to see like what the collection price was, and sometimes if like oracles go down, it can cause like major issues with like
cascading effects,
leverage betting, margin loans, all that jazz.
Okay, so there's no due date or fixed liquidation price like BendDAO has, for example. So people can take loans against their NFTs in a way that is it's market driven, and then they can use that ETH and spend it elsewhere. So I'll pause there. We should also talk about the refinancing auction and stuff like that. But you guys were starting to dig in to Blend at the beginning of the show. I know Spencer's a big Blur fan. I know Easy probably knows the ins and outs of this, and Kix probably has a good opinion. I can't wait to hear what Signal says. But and of course, Nifty. Let's just start with Nick. Please, Nick, take it away.
I think that's shaded, dude.
Well, yes, it started with Spencer being like, "Yeah, you can go get a risk-free 0% interest loan," but that lender can choose at any given point to rescind that loan, which is crazy. That's like a crazy situation, basically.
No. They can auction the loan to another lender. So this is the thing. If you look at like
Okay,
the
but
loan depth,
if there's no liquidity on those loans,
Then it goes under, it gets recalled. So
Yeah.
technically, yeah, there's two steps. It goes to auction, no auction. If the auction doesn't close, it just gets pulled back anyway. So yes, theoretically,
so they can rescind the loan at any point.
Any point.
well, right, but like there's like the auctions are automatic, so no one needs to bid on the auctions. It's just there is liquidity on the platform already, right? So you can see the liquidity depth of loans on Blur at any given time. So the terms of your loan can change.
One.
Yeah,
Like it just rolls into the next one automatically.
But doesn't this really screw over the borrower if it goes to auction and you have an increasing interest rate, which you never expected to
It's
get?
a daily APY too, by the way.
Yes, exactly.
Daily.
So the borrower here is actually at greater risk than the lender once it goes to auction.
The borrower is basically trading, like literally trading with the loan. It's not like a mortgage where like I know what my deal is when I got the loan against my asset.
It's a call option with an interest on top of whatever you paid that you now have to pay back daily.
Wait, is it a call option or a put option?
It's a call option. It's a call option on the buy now, pay later.
Yeah.
Oh, okay. Because
you're betting that it just goes up.
Leverage against the Singaporean dollar.
All right, now we're getting into something. I like where your head's at. All right.
Inside joke, ladies and gentlemen.
So one thing that's interesting though is right now you can borrow like pretty high percent of value at a 0% interest rate loan, which is essentially like an option to default on the loan, right, for free.
Azukis were 110% total TVL last night for a loan. So with
for a 0%
APY.
loan.
Yes, you could get over floor on a floor asset by like 0.3 or 0.4 ETH last night.
Yeah. There was also
which actually here's the beauty of it. I just want to say something, Spencer. What you're saying, another way of saying it is default it. Do I pay no capital gains now? Like this basically like I just essentially was in default. It has no impact on my credit score, and I didn't get capital gains because instead it was a loan that I defaulted on.
The old Poopy special. Poopy.
You know, I'm not gonna make a comment as to any tax implications there because I am not an accountant, but that sounds species spicy, Mr. Nicholas. I think you found a little glitch in the matrix there.
That's what Poopy was doing with BendDAO. They were like, "Why are you letting your doodles default?" And he's because like I'm not trying to pay taxes. I swear to God, he tweeted about it.
I'm sure that. I mean, look, people do interesting things. I mean, so Easy pointed out.
Dude, I just ruined like that Bored Ape sale. I could have just saved myself, 15
no,
grand.
Bored Apes are not on there. Only Miladies.
No, but he could have done it on BendDAO. He still could have gotten like intentionally
or Paraspace or whatever. There's a few of them.
Well, the crazy thing too, I mean, so the reason that the price of all these assets has just been pushed up and up and up and up recently is because you can currently buy at a 0 interest rate loan for 2.6 ETH, a 16.6 ETH Azuki,
Yeah.
Which is crazy because if it goes like this is like the thing that you got to understand here is if you're putting 2.6 ETH down and the Azuki goes up, let's call it like,
5 ETH?
0.2 ETH, 0.3 ETH. That's a 10% gain on the capital you put down, and you can sell the asset you bought to repay the loan.
Yeah.
So
Right.
like this is basically giving you like kind of very, very like cheap funding rate leverage right now.
There's call options.
I gotta
With
say,
interest. It's a call
this-
option with interest.
no, but there's no interest. This is the thing. But like, I gotta say, this zero interest rate environment on Blend, like, it makes no sense. I have no idea why there are lenders doing this.
The points.
Yeah, but so the thing is, the second you accept their offer of a zero interest rate loan, they stop earning points. So like,
Do they know that though?
I think
That's not
people don't realize that there's a penalty for canceling within the first 24 hours of the loan. That's what I think people aren't going to realize. This is around for a couple of days tops, I think. Like this is like that period of time when the Blur bid was above floor for like every collection. Like this can't last.
Well, I mean, we'll see. We'll see how it plays out. I
don't
wanted
know,
to. Oh, go ahead,
the other
Sig.
collections are going up. Like other collections across the market are going up now in anticipation that they will also be able to be loaned and borrowed against. So the next play that everybody's thinking about is that it's going to be DGods because that's kind of like the banner collection on Blur right now. So I think this could be around a little bit longer than perhaps the initial listing the initial floor price increase that we saw when Blur first came in. I think this could be around longer because you have lots of holders who currently have these assets that are waiting for the loans to now be available on their collections.
Yeah. Well, I mean, we got to see what happens. I didn't even think of that, Sig. I also am distracted by Sig's wonderful background. It's making me want to just be present in the part of the world that Sig is. We're over here in New York City stepping in poop where Sig's got the beautiful rose garden behind her with, I wouldn't be surprised. I think that structure was probably built hundreds of years ago.
No, this is very common where I am that everybody has flowers hanging on the balconies. It's extremely common. You see it everywhere.
Pio has a dog, walks outside and expects to feel like he's in an Italian countryside, like living in New York City, and gets infuriated at the fact that it's not the Italian countryside when he walks outside his door. He's just like, I don't get it. Well, why isn't this the Italian countryside?
It's true. I wish I was in Verona or something. Anyway, Bunny's got his hand raised. Bunny, what are your thoughts, man?
I was curious if Spencer thought that the buy now pay later could like have a negative effect on like Moonbirds, Doodles, and like that price range, like the mid-market caps NFTs. Because like if I could spend the same amount of money just getting a Suki, why wouldn't I try that?
And Bunny, you can just say BNPL if you're trying to be quicker. Just Benipple.
Yeah, that's what we're doing.
Well, the impact of Benipple on the mid caps. So the thing is, like, I think over time we will see this available for all collections, right? And so that won't really be a thing, right? You're saying right now for 2.6 ETH you can buy an Azuki, but also like Azukis have pumped really hard, right? Like Azukis are up like what? They're up from like, I don't know, they were ranging at like 14, 15. Now they're at like 16 and a half. Like the thing is, if you buy now, pay later, and the Azuki goes under the price you paid for it, and your loan refinances above 0%, like you're in a weird situation. And the thing is, like the interest rate is a daily interest rate. So like you could go and buy today an Azuki for 0.85 ETH, but you're going to pay 3% daily interest, which is really high. The thing is, you're not paying that interest as in giving them the money. It's just what happens is the Azuki is not in your wallet. It's locked in a third wallet, right? And so your ability to unlock it from that extra wallet, like the price that the Azuki needs to maintain for it to be profitable for you to ever unlock it goes up and up and up every day. And so you're almost certainly in a default. And then the lender isn't really
per day or APR compounded
no
daily?
per day.
Is it 3% interest
Daily.
per day?
Daily.
Per day.
Daily.
Yes.
Every single one of those is daily.
So like this loan will like almost certainly default unless this person sells it in like within 24 hours or something, right? And so like there's gonna be a lot more people like the result of everything going on right now is give it like 3 weeks because everyone taking these 0 interest rate loans, like all the whenever the 0 interest rate lenders realize how bad an idea this is, they're going to go try and cancel their loans, right? Which means there's going to be all these auctions, which means all the borrowers are going to end up in these super high interest rate loans, which means that they're then going to go, oh shit, I need to cover my loan. They're going to try and pay it back, or it may just, they're going to not notice it because again, you just like, you put your email in and hope you notice it in time. And then there's going to be all these defaults. This could be very messy over like a middle
We
period
are
of time.
so early.
How do the
Yeah, we're so
defaults-
early, easy. I mean, honestly, think about this. Think when people go to the pawn shop just because they can get a better interest rate there to pay down.
Or like a cash
There,
advance
or-
thing. because,
Exactly.
like,
They're
you
going
can't
to go
wait
to like a
24
pawn
hours.
shop and be like, you guys are only 30% APY. Like, oh, that's awesome. Great. Here's my mom's jewelry. I need some cash. I need to go pay down this Blur loan real quick. The problem that I see is that I think a lot of people trading NFTs don't have a financial literacy to their, pedigree. And so I don't think a lot of people are going to even know how to calculate their risk levels on these things. But hey, I mean, we live in an environment where you can go 1,000x leverage Pepe. Like, who am I to say that you can't take out a loan on your NFT? Go for it. You know what I mean? Try it out.
Dude, don't tell me with a good time. YOLO Rect Finance lets me 1,000x instant, no KYC. What could possibly go wrong?
That's what I'm saying.
Space is
I believe the biggest financial lessons that you learn is when you fucking lose a lot of money. And so that's going to teach you. Get out there, experiment, do it. Find out what 1,000x leverage does. Find out what a loan is. Me personally, as a trader, I'm excited for the buy now, pay later, using that as a call option when we have like high volume come back to the market. So like I actually could see myself using that product personally.
So I can just let it default and it goes up the ladder. People stop, like they don't receive payments. Like, is the payment daily and then does it immediately go into default? Like, do you have to post collateral every single day?
No, it's just when they recall it or when the
So
the balance just keeps going up.
There's no personal impact to me as
So-
a default.
Whatever the initial balance paid is that's it.
So the thing is too, when the auction gets re-auctioned, so let's say there is an interest rate, right? And so you have, let's say you put your 3 ETH down to buy your Azuki, right? You have your interest rate, you've accrued another ETH in interest, right? The person who, when they auction the loan off, the person who gets the loan buys the debt essentially. And so like the issue with this is that you have 2 numbers that can possibly converge, right? You have an interest rate, which makes the amount that you're supposed to pay back in order to get the asset go up and up and up and up. And then you have the floor price, which could go down and down and down and down. And like these converging could be very bad, right?
What? So the floor price goes down upon
Because-
default, right?
Well, so
Or
like
it can just go up or down with it.
default, there is no time-based default in this system. Defaulting only really happens when the floor price and the loan and the like amount of
If there's no lender, if there's no lender, then it goes to market. Is my assumption.
right. But when is there the case that there should be no lender at any interest rate?
Well, I guess what you're saying is the final lender is the one that has to liquidate.
Yeah. So like
Yeah.
if I did the loan, Nick, and you're on the buy now, pay later side, right? So you have you put some ETH in, right, to it. Like if I cancel my loan and then no one picks it up, you're defaulting on me essentially.
And then I need to go and sell that asset.
No, it's locked in a third person wallet. I would just get the asset back and you would lose your principal, which is the
But I need to go sell the asset. I'm not like I went and bought it for you. Like I didn't want the Azuki necessarily. Although what you're saying is the upside of this for the lender is they can get a discount Azuki. They basically were able to get that Azuki for the collateral that was posted essentially. So I go and buy it. I have money. I can go buy an Azuki. I buy it for 15 ETH. I'm making up a number here.
Mhm.
I say, hey, you buyer, I'll give it to you buy now, pay later. You give me 3 ETH right now, which means that I actually bought it for 12 ETH if I want it, if you end up defaulting, essentially.
If I default.
So I get downside protection from that standpoint. And theoretically, if I can go sell it for anything above that 12 ETH, I've made a profit on the loan still.
Mm-hmm. Yes.
Which is not like an awful situation. It just means though that like if I now get into this and I'm the lender and I lever myself and I keep doing this over and over and over again and I become a big time lender. If I get
it's called an infinite money glitch, Nick. It never fails. What could possibly go wrong here?
No, I'm just saying like legitimately that's the situation that the market runs into risk, is that there's a large lender that now says, hey, you know what? I want my money.
Yeah.
And they go dump all their NFTs on.
And particularly, there's a large risk if there's a large lender, let's say, and one of the big lenders here is our good old pal, Machi Big Brother.
Is he? He's back?
Yeah, he's back.
He's the leading lender right now. 633 loans.
Let's say there's a big lender out there who is, I don't know, lending at 0% interest rate.
He's doing that?
He wakes up, the floor, the way you bid the points right now is 0% interest rates that are like high percent of TLV, right? So now let's say you go.
No, if you look, he's not 0% though. If you look, even its average is 3%. So he's fairly close to a percentage.
He's pretty good, right? So, but like, let's say that, but look at those top other lenders, right?
0, 0.
Yeah, there's smoke.
Six of the top 10 lenders have like 0% interest rate average loan. Now let's say they realize how dumb this is, that they have now given everybody an option to default at no risk, right? 24 hours, they're going to cancel every single loan that they just made. They have to, unless they're like truly not thinking.
So hold on. Let's be clear. We did just articulate the incentive behind a 0% interest rate loan, and that's the collateral that you get. So my downside protection is I want these assets. I want to go buy, I'll use a Bored Ape.
But why would the borrower ever default?
Why would the borrower default at a 0? Oh, I see what you're saying.
Yeah,
There's no default when it's 0%.
You're just giving them a free option to default if it goes below the floor price. If the floor price goes below what they borrowed, it's a free option for them to default, right?
But also Machi could just cancel all of his loans.
And also, like, if you're bid farming, of course you're going to cancel all your loans, because when the money is locked in the loan, you don't get points. You only get points when it's not being borrowed, right?
So basically, we're gonna have a bunch of people that are gonna not notice that their loan goes on a 30-hour ticker, or if there's a lot of liquidity, it's just going to kick to the next lender.
And can I put this money in like we're getting into a lot of details here, but
it's worth it because this is a notable new mechanic, and you guys are doing a great job.
So can I go take essentially, let's say I want to lend my punk or I want money against it. So I take $100,000 against it, 0% interest or something like that. Okay. So I get $100,000. Is there a wallet that I could go put like $10,000 in basically and say, look, I'm willing to say, or even $20,000. I'm willing to take the $80,000 because I would have paid taxes, assuming that this all went up, but ignore the tax logic for now because I still bought my punk for pretty expensive.
Yep.
So let's say that
you never sold it.
I never sold it, but I'm saying, you know what? I want that money to go do other things with. So I'm going to take $80,000. I'm going to take the $80,000 and I'm going to keep $20,000 of it in a wallet which manages this situation should there be other payments that need to happen. Can that be automated? Like, can I just go place it in an account?
Also, you never have payments that need to happen unless there's a default, but there's no automated way.
Or if the lender says, I don't want it anymore, and the interest rate goes up, basically, is what.
So there's no. So actually, funny you say this. I had a conversation with Pac-Man yesterday about exactly this. There is not a way to do that. So there's no way to have anything automatic happen currently without like setting up your own programming. That is a function of, okay, the interest rate changes. Now I need to do something different. That doesn't exist.
Ideally, they would take it out of your Blur lending pool. You know what I mean? How you can put money into Blur. Ideally, they would charge the interest to your account there. But Nick, what you should do, you're almost there at understanding it. With that $80,000, now you want to go buy now, pay later, and get 10 punks.
Okay. so
infinite money.
Then I'm fully levered. No, I'm not going to do that. But here's the thing. I just want to say this is a fucking half-baked solution, man. If I don't have a system where I can't manage my collateral basis, like a margin account, essentially is what it is. And I can't have that money in there. If I was dealing with a broker or a bank, like with a large account, they will say they'll let you essentially over collateralize or like under collateralize your margin. And they'll say at the end of the day, they'll say, hey, you owe us this money. Otherwise, we're liquidating your position, because the banks are large enough that they can handle that sort of risk. And they had priced that into their margin account. But in this sort of decentralized system, it just it punts you from the system, essentially, is what'll happen within 24 hours. So like at any given moment, you're on vacation, you're in some other place because you're traveling the world with the $80,000 extra cash in your pocket right now. I'm just making up a hypothetical situation because you wanted to go.
Yeah, this is very, very risky for the borrowers.
Well, yeah, BL8 said Blur should have offered points while the loan is out, not just for offering the loans. I think that's interesting.
I agree with that, by the way. But the issue, there's a huge issue with this, which is that what the meta you end up with is people borrowing from themselves.
Yeah, good point.
Yeah.
That's why they didn't that's why they did bidding the same way. Okay. I think the interesting thing that they did that maybe the other lending programs didn't is they seem to have done a very good job with the market making behind this, because am I right in understanding that the buy now, pay later is the flip side of the borrowing? So that's pretty significant.
This is the beauty of this. This is actually a technologically beautiful system, because why is there so much liquidity for all these defaulting auctions? Is that the buy now, pay later and the loan against your NFT, when you are offering it up, you're not offering one or the other. You're just offering an interest rate on a loan against an asset, and those are the same thing.
Yeah. So that's like really a pretty big
beautiful
innovation. Yeah, they've market made both sides of the equation.
But this is not an innovation, to be clear. I'm pretty sure BendDAO does this.
Wait, sorry. Can we recap that once more, just so I fully understand what?
Okay, so like think about it this way: if I am borrowing against my CryptoPunk, right? So there's a CryptoPunk with a loan against it. This exists, right? And let's say I am borrowing to buy a CryptoPunk. There is also a CryptoPunk with a loan against it. These are actually, the lender doesn't, like, these are the same thing from the perspective of the lender.
Well,
but basically the significance, Nick, is that like BendDAO, if you think about it, BendDAO is kind of like siloed off and only like, for better or worse, like sophisticated or not, but like only certain people are working with it. Basically, Blur has like kind of injected a BendDAO like loan system into a like retail trading system. So basically, they're going to create a lot more liquidity around the loans than these other companies have done.
Quick note: I've gotten a text message from an accountant who will remain unnamed, who says if your NFT loan is liquidated, that is considered a sale for tax purposes. So capital gain or loss. Just wanted to make sure you're aware before you got into any crazy leverage trades.
I mean, Nick's not gonna do any crazy leverage trades. Gotta think something like that would be a taxable event, so that makes perfect sense. So wait, it is worth discussing this, and then I want to go to Easy in a second, because I'm curious what Easy thinks, and also I want to hear about how Solana has already done this for months. But so I think that the kind of piecing this into the Blur puzzle in a beautiful way, like Spencer and Kix are kind of pointing out, is very on brand for Pac-Man, who I think a lot of people view as a very, very strong young technologist, I guess you would say. So just in the most simple way possible, Spencer, why is this beautiful?
This is beautiful because they've basically caused one pool of liquidity per collection to be available for loans against your existing assets and also loans to buy new assets without the lender needing to understand which one's going on, because it doesn't matter.
And that's because it's balanced?
It's because at the end of the day, they're functionally the same thing. Because you just have an asset with a loan against it. Whether the loan was used to buy it or the loan was taken after it was bought doesn't actually matter, right? It's the same thing think about it this way. If you take a loan, if you go and you buy your house all cash, and then you take a loan against your house, it's the same. You end up in the same situation as if you used a loan to buy the house, right? There's just a house with a loan for a certain amount of money against the asset. And so
it's like a HELOC versus a mortgage, but functionally they're very similar.
Yes. As someone who's never owned a house, I didn't know what those things meant, but yes, this is the things.
He's from New York, ladies and gentlemen. No one owns anything here. Okay, before I go to easy, Nick, did you want to chime in with something? It looked like maybe.
I'm just adjusting my mic. It's a weird arm, but there's a layer of complexity here, which goes over my head in terms of I understand the dynamic that you were talking about the multiple sides of this whole system, but it still feels.
Yeah, you don't want to dive into this like YOLOing, right? But I think personally, how I would look at it is if you're a trader, right? So you like to buy NFT assets and you like to flip them, right? If you're an NFT trader, what you should be looking at is the potential, albeit the risky potential, to use buy now, pay later as call options on things that you think are going to make big news events. So like, for example, right, like if buy now, pay later existed in 2021, the second that news came out that Visa bought a punk, the floor price went from like, 60 to 90 overnight, right? If you were in that situation, you could have buy now, paid later and bought like 10 punks for the cost of buying one punk, right? And now you have 10 punks that went from 60 to 90 ETH. So now you've made 300 ETH instead of 30 ETH. Obviously, the flip side of that is if that went against you, you're losing all of your principal.
What you're saying is, where was this in 2021?
Where was this in 2021? I would have made disgusting amounts of money.
I'd have $50 million at this point in time. So that's where I'd be. I'd have so many apes that I'd tell people that if you tweet about Pepe, you're a loser.
People wouldn't even known Franklin's name. If this existed in 2021, I would have owned the whole supply.
But it's not like it couldn't really have existed in 2021 because the market was in that really nascent early stage. I think what's happening now, especially if you just go around a lot of discords, a lot of people are lost, and it's completely normal to be lost about this. It's more complex and needs to be looked into. And if you don't really come from a financial background, a lot of these terms can be quite sort of dizzying to a lot of people. And I think a lot of people are saying that the next bull, whenever that may be, they think or they project that it should look like 2021, 2022. But there's a very good interview out right now with Laura Shin and Pacman, where he's explaining that the crypto market has a lot more liquidity and volume on the derivative side than it does on the spot side. So if you're actually looking at like what could the next bull look like, it could actually look more like this, where perhaps a lot of the participants who are here today just sort of like give up their hands and like, I don't get this. I don't want to take loans. I don't want to borrow. However, on the flip side, the people who do want to do that are attracted to this market because there is more depth, because there is more liquidity, because you can do the types of flips that Kix was just talking about. Now that we have this borrowing lending system, that in fact that is what the next bull run looks like. Much more of a derivative play. Much more like what happens if you can take these loans and then somehow repackage them and be able to like sell them on to somebody else? Like this can just keep getting this can keep getting more financialized. And then and then you have a completely different market participant. So the next bull could just look completely different to what we have projected it to look like, because it could veer much more on this sort of derivative side, loan side, than like as to what we're currently seeing now and is what is being created.
Real quick, Nick, the next bull run is just an army of OSFs and Mandos coming in and just like selling options, going ape shit with leverage. Oh my God.
I was going to say, at least basically what you're getting is more sophisticated investors in the market. And by sophisticated, people giving 0% interest loans on JPEGs, which is very, very sophisticated.
I mean, listen, it makes the most sense here. I just got 4 CryptoPunks for 12 ETH at 0% interest daily APY. So
are you being serious?
Hell no. What? Oh my God, you can though. I just checked. You can get 4 punks for 12.6 ETH right now at 0% daily APY.
I got a question though. Do you think that this brings back sort of like fractionalization was something that like was really like it was a promising thing? That's where I thought a lot of NFTs were headed. We have two contrasting positions here clearly, and you're both about to comment on it, but I just want to set the context of it was fractional art when they were around, and then there was now they're Tessera, and I don't think that they're focused on fractionalizing things. Although I haven't been paying attention. There were a couple like party bid like tools where you could like go and bid on. I bid on one, gave my money and just never got anything, not even a token, nothing. Like literally there was a bug in whatever system I used.
Thanks for the money.
Pretty sure I lost like half an ETH or something like that. Literally just like gone into the ether. But the thing that I wonder is, does that come back as we see these sort of derivative products that entering the market and a desire for those things? I always personally thought that that's where it was headed. I thought that was going to be Coinbase's introduction, was that like they could like literally show a picture of a monkey, like a bored ape essentially, and say, hey, here's this picture. Like you can trade against that particular asset the same way that I'm blanking on the name of that art marketplace that lets you get fractional pieces of Picasso and stuff like that. Masterworks. I thought maybe like Coinbase would enter that market, and then simultaneously that would provide liquidity for me as a holder, is that essentially I could now fractionalize my asset and get money out of that. Although in the case of my accountant, it sounds like that's a sale if you do that at a gain. So it is a taxable event. Get out of here, accountant.
If you refinance your NFTs and do a cash out refi, that's not a taxable event, Nick. So, well, look, real quick. I want to hear from Easy. There's a lot going on. I also want to comment, Nick. Kicks, are you wearing like a shoulder, like that's a brooch or something right there? Like what Signal? What kind of an article of clothing is this around Kicks' shoulders right here?
It's like a fur shawl.
A shawl.
This is a cryo vest. I talked to Alex Becker a lot, and he recommended it. It's super, super high end. It's basically just good for, if you're like a top performer. Like I wouldn't recommend it if you're not like at the peak of your game already. It's actually just a heating pad that you can wear. It's fucking awesome.
You're focused on optimization. So Easy. So I feel like you probably have a really sophisticated understanding of this blend protocol, right off the bat. But also you pointed out to me that this has already been happening on Solana for months. So another example where Solana was way ahead of Ethereum, and then something drops on Ethereum and everyone's like, oh my God, this is brand new. But it's been on Solana for like a half year, right?
Honestly, it's probably a year now. There's like 6 different platforms you can loan out on, and it's actually like a lot of people navigate the market with figuring out what the loan market is like how many underwater loans there are. Typically indicates a bottom for price action as everybody starts liquidating those as soon as they default. The interesting thing though is like there's much more stringent terms on these, where it's anywhere from 3 to 7 to 14 days. There's no reselling of the loan. Either you pay it off or you default, and that's just kind of like how it is. What's crazy though is like the total value locked on these is almost 90% consistently. So like a lot of traders use this market to recognize gains in capital and then only pay it off if the floor price keeps going up. Like they basically willingly default and don't capitalize on max sell, but get 90% of it after buying in on dips, and just continue to reuse that capital for future trades, additional positions, etc. We actually saw a lot of it with Mad Lads that minted, because people were when Mad Lads was 95 SOL, the loans coming out were at 90, and countless people just recognized the capital there. And if they went to 120, they would just pay it back and then sell it off. But because they went down to 70, they basically made 20 SOL and let the NFT default. So it's been a pretty crazy market to now see that blend, I think is what this is, right? I've been calling it bleach for some reason, probably because it's just terrible and is going to completely cleanse the entire NFT space. I don't know why that comes to my head when I think about this. I'm just like, yeah, this is bleach. A lending platform.
We're going to make bleach. Okay, we're making the bleach protocol.
I don't know why that's like what comes to my head. I was saying it all morning too. I was like, yeah, bleach, blend. But it's...
I need bleach to clean.
Literally, yeah. Like, This thing's gonna have people drinking bleach the way that they're gonna be trading this shit, because this is not gonna end well.
Well, but timeout. Okay, everyone's like, this is not going to end well. I see people from the old guard of NFTs, so you got to love it. Just like how Bitcoiners are just, they refuse to change. You have the 2021 guard of NFTers.
So let me
they're
say
all
this properly. It's not going to end well with 0% and 90% TVL. Those are the two things that don't end well. You're giving somebody, and people are even giving 110% total value on the loan, which is, it doesn't even make sense. Like you're paying over, like you could literally go buy it and sell it into the loan, which is crazy.
We got some background. I don't know what the background noise is. Spencer, I think you got to mute on Twitter. Please mute on Twitter. But so easy. Won't the market in like almost like a survival of the fittest Darwinistic way figure out that that's a problem and that'll just be a no-no?
And you're going to see people literally just self-implode here, where people are trying to make swing trades on some of this stuff. But right now it's like the reason the floors are cruising right now is largely because like a lot of people are recognizing this capital and loaning out and kind of like cycling up. As soon as that starts unwinding, the floor price will retract much faster, which is exactly what we have seen. And this is like what happens on Solana. People pay stupid amounts for these loans, anywhere from 80 to 90% TVL, only for them to be underwater and all those defaulted people absolutely dumping into it. And that's what brings the floor price right down. And that's when actually a lot of new buyers step in, because they realize like, oh, as soon as these loans are done defaulting, the bottom's in. So it creates like because the blockchain is public, you can actually see a lot of this data and actually make moves and actions on it. And I think the ETH market will end up getting there, which in turn does, in a sense, provide more liquidity based on these catalysts of people being underwater on loans, playing into it, selling off. But we're in the first inning of this. So I think right now we're going to see any project that gets this pumps for the first day or two. Like if you got an Azuki loan last night right out the gate at 0.6, 0.7, they're worth like 2 ETH now. Like you could have literally made an ETH and a half just trading the loan, because on Blur, you can take the loan and then resell the NFT and the profit pays back the loan and gives you the profit margin on top. So it's a little bit interesting dynamic, but I think this just continues to put down like Blur is catering to traders and active market participants.
It's catering to the financial side of the NFT market, which is without question the biggest side of the NFT market. The only thing you'll be able to make a case to be bigger is the gaming side, because you'll actually be able to use the NFTs. But to me, on the financial side, like I can't use an Azuki right now, right? An Azuki is a financial asset. That's what it is. I get that people are like, I like the art, blah, blah, blah. Cool. It is a financial asset. So to me, the ultra financialization of that side of the market is inevitable. And if anything, how could it be bad? Like seriously, like how could it be bad? Like all the people tweeting about, you know, the issues with NFTs now, how could it be bad to go to financialize something that's financial, right?
Yeah, and Pio, I love your
Let's just wrap with that last thing. To financialize something, that's financial.
Well, no, he's
you know
saying
what I mean,
it's already. Yeah, I 100% know what you mean, but I love that you called out gaming assets in this context, because, like, for example, let's say EVE Online, right? They're building a blockchain game, right? And for those people that don't know how EVE Online works, it's basically like this massive space economy where like you can build ships from resources and all sorts of things. When you think about these kinds of programs with this, it's super interesting, Pio, right? Because like imagine you could take you could not buy, but you could loan. You could be on you could loan out a ship to go mine a resource that you needed, right? And then now you have that resource and you keep it, and then you return the ship and like pay back whatever interest you had on it, right? But now you have that resource in the game. Yeah. That's where these things can get like super interesting. Like, oh, okay, like I need to mine this resource to build the ship I want, but the only way I can mine this resource is if I have a Alpha Centauri ship, right? So now we go to Blur and I'm going to borrow one of these ships, pay a little interest, go do what I need to do, and then give it back. Like, I think that kind of stuff in gaming is going to be super interesting. I still think we're a couple of years away from like actually seeing that play out, because you really need like a super deep economy for that to work. But I think that kind of stuff is very interesting.
Yeah, I mean, I agree. And I think that people just need to realize, if you feel like something new is bothering you, you know, you just have to realize like NFTs were new when you got into them. and they're going to continue to evolve and continue to change. Not every change is going to be for the best, but ultimately there's going to be a really significant revolution, and you can do the 2021 NFT old guard thing and just shit on everything that's new, or you can realize this thing's always going to be changing, and I can either try to keep up or I'm just going to get left behind 1,000%. We can move on from Bleach, as Easy's calling it. Easy, any other thoughts on Blend? I feel like we heard a little bit from you, but not a ton, and I'm sure you got a lot.
I mean, just for me, it's like I'm looking at this like I'm more interested in finding opportunities for projects that quickly add it, and trying to get in on that potential upside move off the bat. Aside from that, though, it's just like I think eventually this will end up getting more into like the 65, 70 maybe percent TVL. And that's where we start to see some like stability and people then playing that catalyst-based game where they like loan out to get more liquidity, move it into different parts of the market and continue to roll it and cycle it that way. It's a growing pain. Like you said, like we're going to continue to see these different methods of trading these digital assets. And from there, it's really like you either get with it or get left behind. It's like as bluntly as I can put it, because all these changes aren't made for a singular person. It's trial and error. We're still in that growing phase. So right now, it's just kind of like seeing how the market adapts to this. Last night was crazy because you saw Azuki push 2 ETH. You saw Milady's push 40%. You saw Punks bounce 5 ETH. And that's only for 3 collections. So I'm now more curious, like, will more people start leveraging this? Or are we going to just see those same top 10 people that were currently blur farming now do loan farming, which
Machi.
Yeah, exactly.
I mean, for Machi to come back is hilarious. Spencer?
I was just also going to say, like the other thing here too is this system works very well when there's a lot of loans that you can cycle between offered up within a certain collection. I'm not convinced this system works as well. Like if they were to just say, okay, every collection has this now, right? Like that you don't necessarily have quorum of liquidity in any given thing to guarantee that the default auctions don't work. And this is like particularly bad too. The higher the concentration is in certain individuals having all the loans in one collection, their ability to just sell them off. Like you could have mass defaults. There's just weird stuff that happens here. What you really don't want is you don't want there to be like some sort of game where when you trigger a default auction, like you hope that people don't recognize it or whatever. Like it's just, there's a lot of weird incentives here.
And last thing on this, is Pac-Man becoming like, I feel like I'm the only one that points this out on the show.
The main character.
No, absolutely not. Get out of here with that.
Pac-Man's the main character.
No, absolutely. That was not what I was going to say. I hate that, ladies and gentlemen. Easy just basically made a joke. I hate it when people are like, he became the main character. Dude, Sam Bankman-Fried committed global all-time.
He did nothing. He just became the main character.
Global all-time level Bernie Madoff level fraud. It had nothing to do with him being the main character. Is Pac-Man becoming like the biggest, like the most notable builder in the space? He fits the bill of like the young, Sam Altman type. He's like 24, MIT dropout, high school dropout to be a full-time software engineer, pushing the biggest entity in NFTs, which was OpenSea, seemingly to the brink and making it look easy. Is this guy the big? I mean, Spencer had a phone call with him. What's the deal, Spencer? Is this guy? Air it out.
What was discussed on there? Did you get early tips on it? Did you make a trade that may have been questionable? Should we be alerting the SEC to that, Spencer?
No, I mean, look, like I've had a lot of conversations with him since the early days of Blur. Like their team is really good. He's a killer. At the Blur lunch at the NFT NYC, I talked with a lot of the like early investors, and this is not his first rodeo as a startup founder either, even though he's young. Like he's
Y
had
Combinator startup.
He's had an exit. Like he's out for blood. He's doing things right, which is just refreshing, right? Like we're just used to a market where everyone does everything wrong.
Did you just say he's killed a man?
No. He's a killer, as in like he's good at.
We know. We don't think he kills people yet. He's going to become the main character, so maybe. But I was going to say, it's refreshing to have somebody that's actually working and not like just making something and taking all the money out. He's like, no, I'm like building an actual startup company, right?
Yeah.
I got an unrelated question.
Hold on, Nick. Hold on. Go ahead, Spencer. Please finish.
Oh no, I was just saying. Yeah, I was answering your question, Nick. What is your question?
It's not a question. Well, it is a
What's
question.
your statement?
It's unrelated though.
We're ready for unrelated at this point.
All right. I got a question. This is for Spencer.
Ladies and gentlemen, we got a chart pulled up, and
Spencer, a big technical trading person. My question is this what I think it is?
A head and shoulders pattern.
Is this a head and shoulders pattern? And I'm wondering, does this mean that we're going? I think it's from the tip of the head, they say, down to the base. This is how they suggest that, which would get you at a $200 retracement. Are we headed for 1630 ETH there?
I usually just flip the chart upside down, and it looks like we're going to 2100.
I mean, I don't know. We could either be going down or we could be going up. This chart says nothing.
Read me the technicals, Spencer.
It all depends on FOMC tomorrow. Like, quite literally. Like,
Yeah.
that is what's going to dictate the market, and I think that's why we're sitting here. Like,
What are we
this
expecting? A
range.
0.25%?
If
It's the charts, easy.
everything depends not on the percent. I think we do get a raise. A 0.25%'s fine. It all comes
Forward
down to
guidance.
the comments made. Yes, everything is the comments made after right now. Because if they come out and say any sort of dovish talk about not raising rates from here forward, which a lot of people are speculating on, that's a good sign. If they come out and say, nah, bro, we're going to keep pumping these rates for at least the next 4 or 5 months, then it's going to just absolutely nuke the market.
Yeah, it's also like the real thing is, how are they reacting to First Republic Bank getting acquired, right? Like, I've actually seen some arguments that say there's like potentially intent here for there to be a really aggressive Fed meeting to cause more bank defaults, just roll more of the smaller banks into the bigger banks. I don't know if that's true, but like, if you think that the shape of this chart has more to do with the price action than the FOMC meeting, then like, I don't know how to help you.
Dude, all the bankers that I'm talking to are talking about the head and shoulders pattern right now. So that's what I'm just trying to figure out. Here's my take. If I'm looking at this, man, I'm saying this is a predictor of the FOMC meeting. And what I'm telling you is it ain't gonna fare well. So should we let's place a little bet right now. Who's going bullish or bearish on FOMC for tomorrow?
I'm bullish.
You're bullish.
Out the gate bullish, yeah. I'm siding with the people way smarter than me that think rates will stop after tomorrow.
I'm bearish.
I love this. Let's go.
Bearish.
Yeah.
Oh, let's talk about this.
I'm bearish also.
Easy.
Ooh.
Did you hear?
We're going
Easy.
up.
Did you hear that? That prank caller from Russia got on the phone with Jay
For
Powell,
14-year-old kids, yeah.
pretending to be Zelensky, and Jay Powell said there's 2 more rate hikes coming, and they're going to keep rates up for a long time.
What?
Yeah.
Uh-huh.
What?
Pretended to be Zelensky, but the weird thing is,
What?
how the fuck? Why like? So was that published? Like the actual call? Because that's the thing that I'm skeptical of. Why would he not be like? Why am I discussing
Yeah.
our internal policies with Zelensky? Like,
Zelensky's got a lot of weight around Washington. You don't want to get on his bad side. Dude. Look what happened.
His number one concern, I'm telling you right now, is not interest rates. Okay, it's just definitively. It's like that's not.
He's got more going on right now.
Zelensky.
Tanks aren't cheap, dude. If he's getting loans for the tanks at 5%, 6% APY, that's affecting him, you know?
Okay. Well, but I'm sure his people aren't being like, he's not like, look, the Fed's raising interest rates, so we're gonna be.
Hey, Jay Powell took the call, man, and told him. I don't know what to tell you. Jay Powell's like, yo, Zelensky, my boy, let's dab it up over the phone. Yeah, we're doing 2 more rate hikes. We're gonna YOLO wreck these idiots, and then we're gonna keep this
YOLO wreck these idiots,
and we're gonna keep these interest rates high for a long time. Good luck over there in the war. Give me a call anytime. Later.
Someone says Zelensky's getting a blend 0% interest rate loan.
That needs to be paid back. So he's got Jay Powell on the phone.
I mean, straight up, like when you think about it, like why wouldn't like more significant investors get involved on this 0% interest rate? Like if the free money's printing, you know, why not? Can I fund, weapons with these 0% interest rate loans on? Is this real? Oh, it is a video.
240,000 views. Clemente?
Let's see. I mean, I haven't watched it.
And,
I just
what we're
found
gonna
this.
find is that growth in
You guys can you guys hear this?
Yeah, turn it up to the max.
positive but modest. It was subdued. So 1% around that level.
Is this AI?
In terms of
It
this
looks
year,
like it.
most forecasts call for the U.S. economy
It's
to continue to
a
grow.
separate background.
He's got the Zoom background on, but yeah, I'll link this up for anyone that wants to watch it.
That feels like AI, bro.
Yeah. Look, at the end of the day, here's kind of my take on all this: is that there's no need for for there to be interest rate decreases or pauses right now. I think they want to cause a recession. They're going to cause a recession at some point, and people are not sufficiently bearish until you have people really saying it's all over, it's never coming back. Like, just stay bearish, and you're probably not wrong in the long run, right? Like, this is just kind of where we're at. I don't see interest rates improving substantially until 2024, right at the earliest. I think we're in for a rocky 2 quarters, because these are the quarters where everyone's like, oh, maybe we're finally out of the woods. Maybe we can see the light at the end of the tunnel, and I just don't buy it.
I'm on the same page, and we were talking about true despair. I'm feeling significant despair in the NFT market right now, but it's not to a degree where where literally everybody feels like they were complete idiots for being involved. And I feel like that's
Well, that happened when FTX went underwater.
well, that
And everything
temporarily,
90%.
temporarily, that was fear and panic around a singular event, which is different than like. It did cause a lot of us to wonder about this space. I do recall a lot of tweets posting about like, is all crypto a scam, of literally people who are in this space and make their living off of it. I think the Bankless, one of the Bankless people had posted that.
Yeah, because they don't. No, never mind.
Here's the deal. I'm taking the Spencer position here as well. I'm going bearish, not because of just the emotions of the market, but also because of the head and shoulders pattern that I'm observing here. I do like an additional 10% retracement here on the price of ETH. And the only question I have is like, should I have sold my soul, Solana, to be clear? I've already sold my soul. My Solana at $25. And I think the answer to that probably is going to look like yes. Fortunately, I only invested like 10 grand into that.
But at like $12 or something, right?
No. At like 20. I bought like, I was like, oh, this is going to go up. I have other Solana that I'd bought cheap, but I bought another 10 grand at like 20-ish. And then it like immediately popped because the market was listening to our morning show. And so now it's basically almost fully retraced. And I'm just wondering if like this was just a temporary bull. I don't know. We'll see.
We'll see. Ladies and gentlemen, that's our show. We do the show Monday through Friday, 9 a.m. to 10:15 a.m. Eastern time, right here on Twitter Spaces. Also available on YouTube, on Spotify podcasts, Apple podcasts, wherever you get your podcasts. Share it with people that are normal people and aren't on Twitter. Share it with them. Let them listen to the show too. Check it out on YouTube if you want to see a bunch of beautiful faces as you listen to the show. If you do watch the show there, make sure that you like the videos on YouTube. It really helps. We will be back tomorrow. Thanks so much for listening. We will be